Morning, guys. Okay, so today I'm going to look at the euro dollar. The reason I'm going to look at the euro dollar, I've got my screen set up. If you look bottom left here, pivots. So I have three different screens. Okay, the first is the daily. I'm just showing the trend up. As you can see, if this major level of resistance on this daily chart, if you look, it's hit up against here, it's pulled back. It hit up against here a week ago, hit up against here yesterday's, pulled back, and it's struggling against this level of resistance. Now, is this weakness going to continue? It is above the 50 and the 200 on the daily, so that generally is quite a bullish signal, right? However, this is the contrarian play, and I want you to think like a currency trader, right? Because all things don't continue in the same direction forever. Markets move in cycles. They breathe like lungs, okay? They breathe in, and then they breathe out, okay? Think like that. So nothing just keeps going forever. So what are those turning points and how can we finesse this to enter a good trade? Let me show you. So we're up against this resistance level on the daily, as you can see. Hits there, pulls back, hits there, is pulling back. Now, let's drop down onto what we call a pivot point screen. If you haven't done pivot points, you're going to love this because this is powerful. So pivot points, look here. The pivot point says, this PP stands for pivot point. These are Fibonacci adjusted pivot points. These lines are calculated from previous day's trading activity, which is powerful because yesterday, Monday, was a full trading day. It created highs, lows, it created midpoints. And then from yesterday, this was yesterday, Monday. This was the weekend, obviously. Then you can see today's pivot points. Yesterday was generally an update, bounced off the main pivot point line. Now, generally, if it's above the pivot point line, the blue line, we're looking for long positions. Stayed long all day yesterday. In fact, broke through R1, went through R2, pulled back, hit R3. Normally you'd expect a pullback, but it had so much pressure yesterday, kept moving. Went right through R3 and today started R1, above the R1 level. So this is where the pivot point line would be today. In other words, below that blue line, we're looking for sell positions. Above the blue line, we're looking for long positions. So how do I use this? Well, what's great about pivot point lines is you'll notice the market reacts well and strongly to these pivot point lines. Look, sitting on the R1, pulling back to that main pivot point line. Here's the trade idea. Given that the daily, let me just quickly jump you back to the daily again, is showing resistance right along this line here. I can even mark that for you if you'd like. Horizontal line, I'll stick that in there and you'll see it. Look, you're right on that resistance line, look. And the price is, what are we at? 1028. So there you're right on that. So you could have a pullback. There's a nice gap down here. It could push on further, but how do we know how to enter? Back to the pivot point line, and I'll show you. Now, that red line now you can see is on the 5-minute pivot point line. You can actually see that same red line that I put on the daily. It's showing me it on the 5-minute, but I don't want to go short until I break that pivot point line. So how do I do it? Right, I pull them out, take the profit out of the way, put the stop loss above your R1 level. In fact, actually, your stop loss, if you want to be a little bit better than that, go to really where it went to, which was above, you can stick it above R2. Now you're really protected. You're protected by an R1 and R2. Where's your entry? Your sell entry is breaking through that pivot point line. So I want to be down here. So I'm looking for a profit target of the previous day's trading activity. So I'm down here to where we got to the pivot point line yesterday. So I'm just above S2. So if we get in, we will trigger in breaking below that pivot point line. That's where the market switches from buyers to sellers intraday based on this pivot point line. Very, very powerful. If it breaks through there, we will enter on the sell entry and we'll take profit down there. We'll make 67. So it's a 1-to-1. Most currency trades reward to risk are 1-to-1. Don't let anybody tell you that everything's 3-to-1, 4-to-1. It doesn't exist. What exists is an edge. Your risk should be no more than a couple of percent of your account, maybe less. In this case, it's certainly less than that. But what I'm doing here and what's really important is I'm using the pivot points to show me my entry. So I'm going to sit that entry there, which will allow me to trigger. If I hit the OK button, Smart Chart's happy with that. I'm less than 2% risk. I'm only 0.42. I'm a bit of a risk-averse cat, as you know. So that position is now in. If I go to my trades pending, I've got some breakfast breakouts in today as well, but this is the one I just added in, which is that euro dollar. You can see it's just sitting there ready to go. It just shows me on a naked chart, but if I go back to the actual chart, I was looking at this on, here are the pivot point lines again. So we want to see, so it's got to pull through. This is that main resistance on the daily. Got to get through there. Then it's got to get through the pivot. and then I'll take it just below the pivot. So like, I want certainty this is going to happen. Now, I'm busy right now today writing a new program to help people with their health. So I won't be staring at the markets all day. I don't really stare at the markets all day anyway. But now the orders are set up, I can let this run. I'll check back in with it and see if it gets triggered. And if it does, if it starts moving towards my take profit. If it does, it should get there quite quickly because that's a decent break, bounce off that resistance on the daily, breaking through the power pivot, which is then a short signal intraday, and then trying to collect the profits just ahead of that S2 level. That's my play. Let's check it out. Okay, just thought I'd just jump in here to show you that Eurodollar has fallen as expected from that resistance point, which would have been up there. Remember, it was right on that daily resistance. My sell entry is very, very close to, and my sell entry is like 110.15. It's at 110.19 right now. So just thought I'd just kind of check in with you guys and show you where we are. So yeah, it's making its way, right? It hasn't broke through yet, and I want to see a clear breakthrough this before I'm going in. So I don't touch this, I leave it, and just thought I'd just check in with you and show you what the lay of the land looks like. But of course, this is again just showing you back on this this drop from that. See, this is really strong. If you look really closely here, this resistance level up here, that red line. Well, you can see that red line on this chart here, and it's gone through that red line, but still ahead of the power pivot, and it hasn't gone through much. So notice that I've put my extra orders in there below the power pivot. I want a clean entry into this. I want definite confirmation that this is going to continue at least to my profit target so I can collect my profit. So got to be patient, but it's on its way. It's nearly there. Okay. Okay, guys, it is nearly 6 p.m., 5:54, Tuesday night, 25th of April. Just going to close, the position is closed, as you can see. I'm just going to run you through this position again very, very quickly. As I said, look, it was up against the resistance on the daily. Quickly show you that. And I said, look, 1, 2, third time, probably going to pull back. I was right. Remember, you can only be 50% right, can't you? You know. You've got a 50% chance, should I say, of getting it right and getting it wrong. But I got more of an edge than that, and that is what I showed you. And that's what really successful trading and profitable trading is about. It's about having an edge. What was my edge? Well, my edge was that I expected it to pull back from this area if it broke through this main pivot point line. Remember, the main pivot point line says if the market's below that, there are more sellers in this session today than there were on the previous day's trading session. I set this up as an order. So I was really risk averse, if you remember. Just take you back through this. If I just switch my to a crosshair, you'll see that, look, I was up here. I was above. This is the main pivot point line. Above here is long. Below here is short. They're the rules. R1, R2, R3, that's resistance level 1, resistance level 2, and resistance level 3. This is where we expect the market to hit some resistance and pull back, right? But that is mathematically generated using some Fibonacci as well, but calculated off of previous day's trading activity. What does it mean? It's showing you where the highs, where the potential ceilings of the market are, and where the potential floor of the market is. So that big resistance up on a big daily chart, I'm looking for it to drop down, but I need a level of confirmation. I'm not going to use some little hooky indicators that are going to be not up to speed and giving me false signals. Too many of you are using that. Please stop the incorrect use of indicators. That really is a big mistake. If you want to do intraday trading plays, which, look, for most of you, you're not going to be skilled enough yet to do that. Some of you are, but for many of you, more swing trading to get you going is really where the game's going to be. When you're doing intrading positions, I don't rely on indicators as much for this kind of trade as I would a pivot. Pivots are powerful. Here's why. When we know that market has gone through here, remember, I put my stop loss above R1, above this main resistance line from the daily. So that's your first protection. This is your second. This is your third. My stop loss was above here. That means I've got 3 things that price has got to puncture through to stop me out and prove me wrong. That's where I'm de-risking my trade. It's not about how much money I'm putting on it as much as I'm just being smart about how I make sure that there are a number of things in the road to prevent my stop loss getting stopped out. Too many people put their stop loss too close to current price action. They aren't really looking at the landscape, the war zone of what's going on, and therefore not putting their stop loss in the right place. So I'll forego a load of profit right? Just to make sure that my stop loss is risk adjusted to 2% or less than my account. Of course, when I use smart charts, wherever I put that stop and that entry, it will readjust that and calculate. But generally, I'm putting on 200 lots on a trade like this. My stop's above R3, so it gives me lots of protection. And then I didn't enter until we clearly broke through this main pivot point line, right? So I'll have done that. It would have dropped a bit further. It would have rallied up a bit. I would have been pretty much in loss a little tiny bit there. But then, okay, pretty much it went down. Then it hit my profit target, which was, as you can see on this green spot. I click on the trade. Here's the ticket. And I made 67,765, spot 44. And it's an automated trade, right? Meaning I'm not sat there placing this trade myself. I'm using the power of two things. Larger time frame, strong resistance level, juxtaposition that the trade is likely to pull back from that. That's just good, smart trading knowledge, third touch on a daily chart, and it's not pushing through. If it then breaks through the pivot point line on the 5-minute chart, that's the intraday setup, pulling the trigger moment. I know that now the sellers are in control. I'm going to run that for at least 45 pips. How many pips was it? Let's have a little look. Yeah, 42 pips. Okay, cool. But with 200 lots, that's a decent trade. And of course, if I do it in the UK, I don't have to pay tax on that. That's how it works. So I hope you found this useful and interesting. Any comments or questions, stick them below. But otherwise, thanks for following me. Thanks for following along. Good to have you with me.